Good morning. This is Lance Kenmore with the Kenmore team, and I'd like to welcome you to this week's edition of the Tri-Cities Real Estate Update. As always, you can contact me, Lance Kenmore, direct on my cell phone at 727-8977, or go and visit us on the web at kenmoreteam.com. Once again, I always like to thank John for hosting and everybody here at the station for working to make this happen. Mr. John Mckay, how you doing over there?
It has been an interesting week.
It has been another interesting week as we start to see rumblings and things going on in the community, or maybe,
I don't know if I'd call them rumblings. Or more like seismic activity.
Yes, absolutely. I think we are starting to see people become a little restless, maybe.
Kind of like, for months and months we had seismic activity before Mount St. Helens.
Yep, absolutely. Mm-hmm. It is definitely another iteration of what we're going through in the market and what people are experiencing. And, when people are shut down for a long time, there starts to be kind of a wave of sentiment where that it's getting harder for people in those situations, and they're going longer without income, and they're unsure of what's happening. So yeah, we're seeing that, and we're seeing that in the real estate industry also, and the HBA, the Home Builders Association, they've been rallying hard to try to get residential real estate back open as essential. There still hasn't been a lot of movement on that as of to this exact hour, but those things, like we know, they could change. They could change in a couple hours. They could change in a couple days. So,
kind of depends on some of the pressure being put in the right places too.
The good news is I've really brushed off my skills at home improvement myself personally, Mckay. So
our yard has never looked better. I
got some sun this week and laid some sod and did some work, and so I think a lot of us are in that same boat, and this is just a time where you get out there and do some of that work yourself. And I kind of enjoyed it and let off a little bit of steam out in the yard. So that works really, really well. Well, we always like to start off on a light note before we jump into the seriousness of what's happening. Mm-hmm. And we like to start off with our celebrity real estate story. And this week from robreport.com, I wanted to give you a little insight to Canadian rapper Drake. Mckay, you know who Drake is?
The only reason I know anything about him is because of his affinity for the Toronto Raptors.
Okay, perfect. So, I'm really impressed. We didn't even cue you up on that.
Well, I said, my musical inclinations are far heavier than that.
Well, it is his affinity for the Toronto Raptors is because that is his hometown.
Oh, he is an uber fan.
Toronto.
Kudos to him.
He built a 50,000 square foot mansion in Toronto.
Wow.
And he said it was really interesting because he was building this in his hometown, he wanted the structure to stand firm for 100 years, well beyond his lifespan. He expects this to be something that he's leaving behind, like a legacy. And so I will tell you, the property is something else. I mean, first of all, 50,000 square feet.
Yeah.
Second of all, that's rumored to have cost around $100 million.
Wow.
It's built on 2 acres. The great room, for instance, of this property, the great room has 44-foot high ceilings. I mean, 4 stories of ceilings in a residential property. The scale of the property is just insane. His master bedroom and closet combined is 3,200 square feet. Okay, that's bigger than a lot of the houses that I sell here in Tri-Cities. But, I mean, the attention to detail just goes crazy. You talked about his affinity for the Raptors.
Yes.
He's a huge basketball fan, so it only makes sense that he put a regulation NBA court into this house. And so he's got this beautiful basketball court. He's got these like lounge chairs built in like booths on the side of the court.
Wow.
So I'm sure some of his buddies there from the team come over and shoot around, shoot some hoops, and he can enjoy that. You know, music studio like you would expect.
Yeah.
In fact, because of the attention that the property built, he had to go in front of the Toronto zoning department, and he had to get permission to make the fences around the property higher than what was allowed by city code. And he was able to get that exemption. There was also a large argument to why he got the exemption and other people don't. In the end, they concluded it a safety and security problem, that they didn't want like throngs of people slowing there and affecting traffic to try to see in.
Yeah.
And so that was, I guess that was maybe the excuse, but I think there was some Drake influence on that exception to the city code. So fun property. If you just Google, if you just go to your Google search, type in Drake Mansion Toronto, it comes right up, and there's some really cool pictures there to check out about the property. Well, now we get to the realistic aspect of what we are in with real estate right now in the industry, and then how that affects our local industry. So I'll just kind of start off with an overview of what's going on. And unfortunately, right now, when we look at national stats for the real estate industry, it's a little bit of a horror story with what's going on. We are an industry that has been greatly affected by COVID-19 and the coronavirus and the shutdowns. So Elliot Eisenberg is an economist that I trust a lot and I subscribe to. He puts out some awesome summaries of what's going on in the market. And released this week, the title of this is Hurt Housing from the Bowtie Economist. First-time mortgage applications have fallen now for 5 straight weeks. Mm-hmm. So year over year, this time period versus last year, this time period, first-time mortgage applications are now down 35%. So the second thing to note is the National Association of Home Builders, NAHB, the Housing Market Index for March. It took a 42-point fall to 30, which is the lowest level of that index since June of 2012.
Wow.
And then, and it is also, it's the biggest decline in that index's 35-year history. So unprecedented times there. March housing starts nationally down 22%. Those numbers make it very, very clear that the housing market, which has been going gangbusters pre-COVID, is now in big trouble with those type of numbers for what's going on. Nationally, the number of listings, new listings that are coming on, down 35%. So the number of available properties that are coming online. So not only are we talking about statistics from the NAHB about it being way down, starts being down, now that is translating directly into the Association of Realtors with the number of new listings being down. No new houses being built, no new houses to list. And we've had a ton of new construction in the area because we've had low inventory and large population growth. Pre-COVID, 6 months ago, we were talking on the radio show about there being low inventory. And because there was, you had to go to new construction to find inventory. Now that's essentially been gone for a month, and it's making it difficult on the inventory side. We're going to talk about some of those examples near the end of the show. But before we get into that and what those examples mean from an inventory perspective, I wanted to talk a little bit about changes this week in the lending world that start to really drastically affect buyers in the market. So we're kind of looking at real estate being a supply and demand type of business. And so now we're looking at supply being down because the builders can't finish these homes and get out there. But is demand going down at an equal rate, or is demand flat, or in some cases is demand increasing? So we have to look at that to determine, did they both go down at the same rate, and what's happening and why? Well, some of that demand went down on the buyer side because of what's happening in lending. So
yes,
here's a great example. So Reuters reported this week, and I did some research, jumped online, read through a bunch of these articles. But earlier in the week, JP Morgan Chase, they raised their minimum credit score that buyers have to qualify for a loan. They raised that now up to 700, and they stopped doing loans if the borrowers did not have a down payment of at least 20%.
Ooh.
So they said, okay, these other programs that we have out there, these lower down payment programs, we need to concentrate on our current portfolio. We need to shut down those applications because generally lower down payments, higher risk. Here's the problem, though. If you're looking at a first-time home buyer scenario, what does that do to our buyer pool out there? So I wanted to just give you an example.
Shrink.
It shrinks. It's going to shrink it. So here's why. Here's a great example of that I did up. Let's just say very typical, if I'm looking for a first-time home buyer in the Tri-Cities, they're going to be looking in that price range of roughly $200,000. So let's say pre-COVID, you could go and you could get a loan for 10% down. So on that $200,000 house, you need to have $20,000 saved up. And you're probably going to have roughly 3% in closing costs. So if we take that $200,000 times 3%, so you're going to need another $6,000 in closing costs, and your 10% down was $20,000. So pre-COVID, you would have needed to have $26,000 saved to buy that $200,000 house with a 10% down program. And there's even lower down programs, but I'm just going to talk with the very middle of the road example.
Okay.
Now, Chase changes it, and they said, well, we're only going to do loans. The credit score now, your credit score has to be 700, and we're only going to do loans that have 20% down. So now in that same $200,000 house, you need 20% down. So now we're talking, you have to have $40,000 saved instead of $20,000. You still have your $6,000 in closing costs. So now to purchase that $200,000 property, you have to have $46,000 saved.
Wow.
Okay. So let me go back and tell you out of, say, let's just say the last 50 transactions that I have done under 200,000 in a first-time home buyer. Let me tell you the number of those borrowers that had $46,000 saved up to put down on the house.
0.
Mckay, it's actually 2. But
Wow.
what I am saying to make my point, it is a low number.
2 for 48, or 2 for 40, or 2 for 50.
Yeah, 2 for 50 in that situation. They had that much down in that price point. So now you're going to say, okay, we are tightening up those. So we are going to have less buyers in those pools available to purchase. Now, will it shrink all the way to 0? Absolutely not. And at the same time, they don't put a time cap on these restrictions, so we don't know how long it's going to last. Maybe this direction changes, in 2 or 3 months when things open back up and get back to regular business. That's what I can't tell you. I can just tell you that those changes that are happening right now, this is what's going to start to affect the market 30 and 60 days from now. Yes. And it's already affecting it immediately. So now, that was just one bank. So the reason that I bring this to light is because we're likely going to see other institutions follow suit with similar type of programs. For instance, another thing that happened this week is Freddie and Fannie Mae. So those are the main buying institutions on the secondary market for these mortgages. So they will, all of the lenders you deal with follow the guidelines set by Fannie and Freddie, because that's where the loans will eventually get sold to and then repackaged. Now, they changed what they call age of document requirements this last week also. So generally what that means is your lender, you might have gone in to get pre-qualified 2 months ago. And so when you did, you gave the lender all of your income documentation. You gave them maybe your business tax returns, your pay stubs. They did up the approval. You're pre-approved, good to go, find the house. And you say you find it in the first 2 weeks after that pre-approval, you start to go through underwriting, what it's called, where they review all those documents. Well, before, that was good up to 4 months prior, because it might take you 20 days to find the house, then a home inspection. Well, now what they've done is they're saying now they're only going to allow 2 months time period. Ooh. So if any of your documentation is outside of 60 days now, you're going to have to resubmit. What are they looking for? They're looking for borrowers that have been affected by COVID-19, that have been affected. So now they have to shorten that window down. And then I made some calls. There was nothing official about this that I could find a news article on, but I did make some calls to some local lenders, and God help you if you're self-employed and trying to get a mortgage right now. Wow. Because what's happening, what I'm being told from the people that I'm talking to, is that the overlays on that self-employed and business income are even more rigorous. So for instance, they're now requiring, say you have a great credit score and you have the cash saved up, they're now requiring in underwriting a lot of these mortgages to do a cash flow analysis year over year based upon that business if somebody is self-employed. So they're looking at 2019's time period of how much cash was on hand, what did cash flow look like. Now you're doing that same analysis now during 2020. And if there's discrepancies there because of what's happening in the economy, you're probably not going to get that mortgage right now.
Wow.
So there's new overlays happening big time in that. So I just wanted to get that out there and let people know, if you were pre-approved a month ago and you're out shopping, you need to be having great communication with your lender. And I've heard some stories that are difficult, and it's hard. I talked to a lender about 2 borrowers this week that had spent 6 months getting everything in order. They had worked with their accountant to make sure their business returns were in order. They had a secondary business, and they had worked hard to increase the amount of sales of that business. So they were in the process. They had an offer on a house, and they were in that process. Well, some of these overlays changed and these requirements changed. And in that specific scenario, that borrower had a business that had been shut down for this month. Now they don't qualify for that mortgage. So,
wow,
it's tough when someone has put blood, sweat, and tears into that for 6 months, and then these regulations or changes, and then you have real estate agents that get frustrated. That's hard for the lender to make that call. Hey, we're not going to close. The seller might have moved out of town already. Why are we not going to close? Well, the borrower's business got shut down. So there's a lot of that going along. The communication is probably, in a lot of cases on these files for the lenders, they're probably having to do, I would say, maybe not double, but 40% more work and communication on these files to get them through and get them done. So a lot of changes in the lending world that really affected us on the real estate side right now that we're working through and monitoring. Because of that, we're presenting offers differently at the Kenmore team. So we're putting more focus on employment. There are still buyers we are working with right now that are out there looking. We wrote a number of contracts. We had a great week last week. I'm actually more excited about it than I have been in 3 weeks. And maybe that's just me adjusting to the new normal that they call it. But we wrote a lot of contracts. One of the things that we're doing is like love letters in real estate. You used to, when you're in multiple offers, you used to write a love letter to the seller about, I love your house and it's perfect for me. It's better for my family than their, blah, 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 blah. Right now, we're writing love letters about employment. If we have a borrower that has a strong job, they're in essential services, they're a strong borrower, we're actually writing employment love letters to the sellers saying, hey, our people have money, they have jobs, and they're likely not to change. And that's helping our buyers get deals right now.
Good.
So little changes. We're making all those tweaks in our business and how we do business, and it's helping our clients get homes and still keep the process moving. When we come back from the break, I'm going to give you an additional update on things happening in the local real estate market. And we're going to come back with the pick 3 of some great new property that's come on the market.
Right here on News Talk 870.
Welcome back to the Tri-Cities Real Estate Update. Today we've been covering what I titled COVID Update number 4. I think we're kind of at our 4th major week of getting these announcements out there and settling into how we're doing business, and stuff's moving. I mean, we are putting contracts together. There's new inventory coming on the market. We even had a number of deals last week in multiple offers. And so I'm going to talk about that. Some of that's a supply issue that we're dealing with right now with the lack of new construction coming on. But there is some supply issues. And so part of our goal to solve some of that is what I call the pick 3 every week. And so we've got some new listings out there. And these are awesome new properties that came on the market. So pick number 1, 88702 East Summit View Drive up in Kennewick. And so this is awesome location up there in Summit View. It is a 3-bedroom, 2-bath with a bonus room. 2,571 square feet. Absolutely awesome front porch. Okay, how much are we enjoying front porches nowadays that we are home, actually? So this has beautiful views of Badger Canyon. Inside the house, we've got high vault ceilings, open concept floor plan, beautiful great room with gas fireplace, slab granite counters, large island. I mean, this is just a gorgeous, gorgeous home. The upper level bonus room, too, has a great family room flex space. And it's just got some really cool built-ins. Like they did some just awesome stuff in that bonus room. Big covered patio out back, huge backyard for gardening. And I mean, the yard is just kept gorgeous. So when you get on that, half-acre lot and you've got those beautiful sprawling yards, and the owner has kept this place just amazing. It's just awesome. That's where you enjoy being quarantined. Okay.
If that's possible.
If that's possible. But check it out. Plus, you get a 3-car attached garage that has tons of built-ins. I tell you what, these homeowners, they're just after my own heart with OCD. Just beautifully organized garage. Speaks to the maintenance that they've done. It's just an awesome properties. And that's priced at $505,000 for an amazing location and beautiful home up there in Kennewick. Pick number 2, we're going to take you over to Pasco, 6211 Devon Court. So this is an awesome West Pasco home, spacious layout, 4-bedroom, 3-bath. I've sold a number of homes over the years on Devon Court, super well built. 2,616 square feet. You've got a formal living room, a den office with French door entry, large kitchen, also with granite counter island and breakfast bar, stainless steel appliances, dream backyard, fully fenced. You've got an oversized patio, a garden area, and 2 storage sheds. And that's coming in at $379,900. So just awesome price point, great West Pasco home. And then pick number 3, 523 South Cedar in Pasco. This is our model home out in Urban Flats. And so this is a new townhome community with a modern flair and modern design layout. And what we've got is if you go to our website and you go to our Urban Flats community, we now have a staged model that has a 3D tour out there. And so these are going to be 3-bedroom, 2-bath townhouses. And we're coming in at new construction pricing in this development right at $200,000.
Wow.
And so there's not a great supply of that. And so as soon as residential construction opens back up, we were almost complete where we have like 6 or 7 of these things just ready to go. Inventory's lower in that price point, especially for new construction. So this is something to check out. Go to kenmoreteam.com, go to Urban Flats, look at mod homes and what we have happening there. So with that being said, a little example of the supply problem that we're having. And I just wanted to get this out there as we talk about that. As I was running the stats for the show, an example of what I was saying with the supply and demand and what we're looking at here. So right now, Kennewick, Pasco, Richland, West Richland, 517 active homes on the market right now. So I started looking at some of those stats just to give you an idea. Of those 517, how many are under 300,000? There's only 152 active listings right now under 300,000. So then I took it a step further and said, okay, as we came into COVID last month in March, I said, how many sold from March 1st to March 30th under 300,000? Well, we had 211 sell. Right now, currently, we only have 152 on the market in that price range. Are we going to have a supply problem? Likely so.
Yeah.
And so that's why you start to see the urging of people trying to get residential construction open back up as essential, because now we're headed for a massive supply problem in those situations. That's why amid COVID and what's happening, you're like, well, gosh, it's weird to hear Lance say, we had multiple offers last week in a market where it's really tough to show homes and we're down to just essential type showings. That's what is still happening in the market, and especially in certain price points.
Because people need a place. And the other thing to consider is there are people that put contingency plans in place. If this, then this.
Yes.
Prior to COVID, we need to be out of our existing house in 45 days.
Absolutely.
Our lease runs out. And now their new home or their home they're buying gets held up. Well, where are you going to live? In a storage shed?
Yeah, absolutely. And so then to make matters even worse is we have colliding things happening in the lending world that we talked about before the break. So you have people that had made those plans, had terminated those leases, had canceled those, contingent upon having a place to buy, and now we don't have that place finished, or we can't finish it. We can't get the right inspections that we need to get it done. So like we talked about, Mckay, you and I briefly at the break said that there is a feeling of certain frustrations bubbling to the surface.
Yes.
And that's because in the first 2 to 3 weeks of our COVID updates, we were dealing with what was happening and working on that and looking at the severity of it. But those hard issues are getting harder as we go along and getting more difficult with more layers. So,
which explains why real estate folks don't need haircuts, because they've been pulling it out themselves.
Absolutely, 100%. So those are some of the things that we've been managing. Also, a big shout out to our property management team. Update on property management is this has been a hard time for them as property managers. Working with landlords' interests, getting rent payments collected. But I tell you what, their communication, they have stepped it up big time. Virtually, we are utilizing a lot with Microsoft Teams, with those Zoom meetings, file sharing, collaboration. We've made a lot of adjustments really quick, and it's all about greater communication. And in the property management world right now, you need to be communicating with your tenants. You need to be talking to your landlords. You need to be having great plans in place. We had a super successful first collection cycle during COVID. We have some great plans in place with our tenants. If you're out there with a property as a landlord and you didn't get that, and you want more of that, or it was too much for you to manage yourself, please contact us, because our property management team is just firing on all cylinders right now and doing a fantastic job. And they were able to work with tenants, put plans together, and get those type of things done. So huge shout out to them and what they're doing. And we still have investors looking. Yeah. And there's people willing to take that on. So if this has pushed you over the edge of, I don't want my investment property, I don't want my rental anymore, please reach out to us. Go to kenmoreteam.com, shoot us a message. We'll get you in contact with the right people on the team. But we have investors that are actually increasing what they're buying right now, and looking for those properties. So if you're on the other end of that, please let us know. Once again, if you have any questions at all, go to kenmoreteam.com, shoot us a message. I think I'm just adjusting to this, or I got a lot of sunshine this week, but it was a great week. I'm excited about the changes we've made and how that's being implemented. And so if you have any questions on what that looks like, feel free to call me on my cell phone or shoot us a message at kenmoreteam.com, and we'll be right back to you. And we will also be right back here next week.
Right here on News Talk 870.